Check. Hopefully my mic is coming through pretty well right now. Got these new headphones on right now. And yeah, let's get into it. The night session. I know it's been a while since I've been on here. Maybe about a week or so. Got a little serious with work. But just came to talk about pretty big stats going. I'm really not a fan of giving trades after done. I'm gonna try to start recording more trades and then just uploading those short clips. But in the meantime, between time, you guys know, very transparent as far as putting trades on during the day live when it's a draw tilt or no tilt. I had a nice trading combine with take profit. Got a pro account, got that bad boy into pro status, got up to like 3,600. Felt tilt coming on, took a payout. 2 days later, kaboom, that bad boy. So still a work in progress, but at least we are at the stage where we're getting payouts. And being honest about it, it's only about $1,100 or $1,200. Alright, so now we just position. Cool. So let's jump into Trader Vic real quick. Right, so real quick, let me just let's talk about the market. What is this market trying to do? I don't really want to get into a trade there, so let's just back up out of that for a little bit, get my pointer going. All right, what did the market do? Let's do a 5-minute recap of the day. The market ended up having a nice rally pop into this area here, hit some supply, top of the Bollinger Band, brought this bad boy down. It got stuck, squeezed to this demand line, found support, and the market kind of just chopped around until it kind of like kept making a staircase back up, higher lows, higher highs. And I know you see a lot of lines now, right? So this is crazy. But maybe I'll change the color of this line here. This is your chart's 50 HMA. So the 5-minute 50 HMA. And this big one is our guide. If we're below it, I'm taking shorts all day. So short signal, flip, don't know what to do. We can look at the 2 minute to find this long setup here. Then a supply came in up here on the 2 minute, knocked this market to its ass. We rally right back up, make new highs, get knocked down again, and then we create a 5-minute demand down here. What's interesting about this level is that it's a 4-hour level with a demand. And I'm not going to jump into the 15-minute, but I'm pretty sure there was something on a macro that showed interest down there, especially when you see like this huge wick. All right, wicks tells us everything we need to know about footprints. You guys ever hear when people talk about like, you know, the elephants leave footprints in the market? but nobody ever tell you what the fucking footprint is. Like, what do I look for? The footprints are wicks. It's double bottoms. That means that, especially if it's a double bottom wick. So wick. I don't know what retail guy you know has enough money to move NQ 77 points. That's insane. All right, it's a lot of money that goes behind that. I think it was like, I did the research, it was either 1.2 million or $12 million to move it for 10 points. Move NQ 10 points to the market. So do the math here. All right, let's keep it moving. Market rips up, right? So here we go. We're back at this 516 level. We've been testing this level numerous times in the past, almost like 7-8 times. My sentiment was, all right, well, you know, obviously this guy's gonna have to cave at some point. Will he cave now? Will he cave later? Not really important. What's important is the condition the market is in that can fuel the play, right? I don't care whether we break him or not. All I know is that the market is in this condition here. This is new for you guys. You won't see this on any other charts or any of my past chart, but we'll just focus on this area here. So I coded the charts to turn the bottom of the Bollinger Band to turn green. That's your support zone. Whenever the market is above this big boy line, this 50 HMA, okay, the broken staircase, moving average. If that condition is true, this whole entire Bollinger Band will be green. Now, you might say, well, why would I care about that? And the bottom line is, visually, we like to see conditions over and over, so we're comfortable taking the trade for the move, okay? So I was in this trade literally down here, all right? Now watch this. 498, all right? And I literally got out before we even hit this top, what you call it, supply line on this 5 minute. I did not want to mess with it. Thought I was a genius. Did not re-engage. Looked back at the market and we were up there. Mind you, I took 2 NQs at this level, risking the cloud. This thing rips. I saw a decent profit. It was 2R from my risk factor. Took that and ran. Good trade. Technically good trade. This would have been a monster trade. Whatever. Can't cry over spoiled milk. I see this thing happening. I reopen the laptop. I start getting in somewhere here, take some pops, get out of there. But my target was this 772 level because we broke through the 515, okay? And we didn't break soft. That shit was out. And remember, if this is green, I don't even have to put this on the chart. I know it's true. I like to see it on the chart so I can anticipate when we might do that. Because this is gonna lag. This is gonna turn green after that candle closed. Now, maybe I can say, oh, that candle closed is green, but I'm probably gonna have that analysis somewhere around this candle. Nothing wrong with it, it's just a little bit delayed. Once this is going on, I really don't care about this price action here. This is gray, so the market's still in the squeeze. When this candle turns green, I'm on. So the market opens up, dumps into the money zone. This second green band is your money zone. It's a high probability bounce zone in a strong trend. Doesn't really matter whether you believe it or not. Use your eyes in this condition, and if it's true, we're taking plays. So my code is going to tell you, hey, look, there's a green wedge. Hey, look, there's a green wedge. I don't care. What's that mean to me? Well, it means that if you bet that the market's going to go up, you have a shot at making money. We had a shot at making money at this green wedge, that green wedge, and this green kind of wedge here. The trick is, where do you put your stop? And generally, I get in somewhere down here, and my stop is 20 points away from the market, just in case it wants to create green wedges a little bit lower. But I don't really want to take a trip back down to the bottom of the Bollinger Band, at least not on a 5 minute. That's a big space. So high probability setups, and now we're back at the same condition. What do you mean? Well, we're getting green wedge bounces rejections at supplies. Green wedge bounces, rejection at supply. Green wedge bounce, rejection at supply. And it doesn't mean that we may not get this move, but trying to wait to get this move is just, I've seen myself get back way more money than I needed to being right about this and going at least 2R based on my location. My locations are pretty good in terms of entry. So let's just take a quick look at Tradevate, and look at some of these entries, right? So on Tradevate, I took that pullback. First, I took a trade here during that move. Didn't really take it to 772, which I was calling out in the Discord. Said we might make a move up to 772. It's in a push phase. This could be where it does it. The market does not move unless it's in a push phase. So anyways, I closed it down because I'm up like 400 at this point. I said, you know what, let me open up again. I take some contracts here, stop out there, re-engage here, get out at highs here. I was going to take, I think it was this pullback. I'm not sure. I think it might have even been able to take this pullback. I think it might have been that pullback. And I would have been up again, just seeing if the market continues. It just ripped through supply, right? Nice little move through supply. Now, this chart is naked. It doesn't really show you anything to like trade other than, you know, something that you draw. Like, let's say this price action line, you know, I drew that. We ripped right through it. I had no faith in it. I got out my coins and then the market bounced. But either way, I had to do it. But let's say you create this new price action line and tell the market to respect that line. You could trade this all day. There's no problem with this, right? Because you're basically saying this is the new momentum or bounce zone without waiting for it to, like, watch this line and now watch this money zone. That's a 2-minute chart, by the way, guys. So we're going to jump into a 2-minute chart. Look at the area in question. And now look at this. I can draw that same trend line. And the bounces are coming from the money zone with wedges letting me know to get in. So I don't want to draw anything. I don't want to draw anything. Most of the times I just want to jump in where the buyers will defend and ride that up. And that's just my edge, right? Now, in a green on green condition, meaning we saw that we were above the 200 moving average way down here, and this green 50 HMA. So both of these are 15-minute levels. This entire market is green, okay? That's going to be your kind of triple threat, what do you call it, when all of the moving averages are in sync. The name will come to me, but basically we have a 15-minute bullish cross, 15-minute 50 HMA momentum cross, 50-minute, a 2-minute, this is a 2-minute Bollinger Band that's green because this condition is true since back here. And then you have a green money zone letting you know the trend is bullish. So market bullish, trend bullish, and we're in an acceleration phase. Now that this candle turned green, it's showing you that this whole thing is the acceleration phase. So I don't know if anyone ever heard of Wyckoff theories or like the Wyckoff model: accumulation, acceleration, distribution, deceleration, accumulation, acceleration, right? And the market just does ebbs and flows. The problem with that is that I don't care what time frame you're looking at, you're going to have a different conclusion than I would if I was looking at a higher time frame, which is fine. If you're trading a smaller time frame and the market decelerated, I can tell you this is a deceleration phase because it was a squeeze to the downside. The market distributed up here at supply, accumulated at demand, jumped up into an acceleration phase, rallied, basically distributed over here, and we didn't really have a massive deceleration. That's fine. That happens sometimes. And that's why the Wyckoff is hard, because if you got into shorts up here at supply, distribution, you'd be basically taking sellers who got a lot of money on this up move, on this bounce, right? And that's fine. But when the distribution doesn't go, you got to get out of there. Now, demand comes in, we're back to acceleration, accumulation. That's how I read the ebbs and flows of the market. But again, anybody could be wrong. The bottom line for me is we're going to ping pong on this supply and demand because there's sellers up here like crazy and there's buyers down here like crazy. Without these green lines, just look left. Look left, 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 left. And you'll see that that's where the price action is. But how do you make money in this market, right? Like, how do you make money knowing all this information? Well, the code is telling you don't think too much. This green line comes in, take a trade, and it gives you the entire information up here. This trade went 1R if you put one MNQ on the line before we left this gray box. And that's what I did. I took it up here somewhere, right? Like 760. It told me to hold this trade. And we no longer see 1R. We're seeing what 2R would yield, right? 809. 809 is way up there. This market could go up there for a 2R demand trade, right? It could do that. But I'm only taking bullish setups. I don't care about any of these shorts because I've seen that in this green on green condition, the bulls have a higher probability of setting the market up. So anyways, guys, it's a lot to take in. It's a lot to look at. But when you know what you're looking for, it's easy. Only trade this condition. If this guy is green, you're in good condition. If it's red, you're in good condition to trade shorts. All right. Occasionally, you'll get into this morning's chop. This was squeezing literally all day. If you didn't catch this red kind of trend right here, right? Like boom, you're all the way down here. If you didn't catch some pullbacks for this short move, you didn't really have a fighting chance in this market. And that's what I think made it hard this morning. But I caught shorts. That's what got me up nice on the day. I think we closed the day out $755. But yeah, let's get back to. Oh, sorry, you guys didn't even see any of that. I was still showing this chart. Let's get to the stats. So this one is an Apex 150K count. We're up $574 just trading the night session. The day session was 750 something. I think I should call it a night. We're going into tomorrow really well. We took a mixture of NQs and MNQs. I'm trading very aggressively on this one. I'm just taking my 12-point stops on NQ, and I'm trying to take rips. Like I'll take 1R to 2R on NQ rips. But let's look at the whole stats for today. All right. We made a total of $1,402, 1,330 take home after trading only 29, about 58 contracts, 29 trades. Not a lot of trades, nothing too crazy. We went up in a day, made about 490, came back down. We were down 945, and then we finally got on the right side, made 1,041, and then towards the end of the day, we made this, 1402. One of the things that I want to pay attention to when I trade is this. How much am I losing and how much am I gaining? So in this case, if it's even, you're good, right? Like never take larger losers than you take larger winners. If you do that, you will blow a lot of days off and you'll be climbing the mountain trying to come back from that. So try not to do that. But besides that, in this case, we did well. We didn't do too bad. We lost 295, but we were making 355 on the other side. And this was across multiple contracts. And during the night session, we were losing about 44, but making about 165. So that is the type of thing that will propel P&Ls to the upside. So the secret is take stops. Just take stops, get on the right side based on your edge. Just try again. Don't switch sides. Try again. And hopefully you would end up moving towards the right side. Now, the other trick is if you hit your daily loss limit, just stop. You're off. And that's why it's good to take your stops, because it gives you a fighting chance for the next trade. All right. Go back to the next. They're talking about, but let's get back to the main chart. And let's see if the market is going to continue to boom. And it's gone. A nice little breakout. And guys, look, money's on, money's on. Right now, this was a squeeze setup. Market was squeezing. This white cloud is a squeeze. I only give you two trades: demand, squeeze. Demand, supply. Right? Just two types of trades: supply and demand, or a squeeze. This squeeze is already up 1R, 39 points. It was risking 19 points. Right? I know you're not making crazy money, but think about this. The discipline of constantly taking these setups and not oversizing with one contract will give you $39. If you then switch to NQ, you're going to lose $390, but you're going to make $39. Now let's think about how many times did we hit. This trade right here was a demand trade that's up 2R, 160. Add a zero, you'll be up $1,600. If you would have added here, that's an extra $300 and something. You don't need to trade anymore. You don't need to bang these every single time. Look at this trade. This one failed. It was risking about 40 points. This one here was risking about the same. Entry stop risk 40 points. Yep. Because the ATR doesn't change. About 40 points. And it got you 80 points. 84 points. So yeah, you lose $1,600 one time, but then you get back in, you make your you lose $800 one time, you get back in, you make $1,600 next time, just with discipline and not necessarily caring about the P&L. Anyways, with all that being said, guys, like, I know you didn't hear the rant that I was talking about with the green cloud and everything, but long story short, we are conditional based traders. We want the market to be in a condition that is fruitful for us. Last night, look at this. Look at this. Identical. Green, 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 green. Okay? This line here lets you know what you're looking for. You want a green above, green below, and that's going to be a monster. Here we go again. Green, green, line in the middle. And it's all because we're above this condition. Here we go again with a squeeze. Market's back on some bullish momentum. Yeah, we knew that we could have gotten in back here and anticipated this. If we're in this, we're taking some profit and we're seeing if the squeeze is going to be strong or not. Start trailing with this line. It's a break-even trade regardless. And if you ever hit, you'll be getting all of that, okay? And that's kind of what I want to get to. I'm not fully there yet, but let's see if we can find, look, red, red, red. Nice move down. That's chop over there. Another like nice move down, nice move down. It's not easy. It's not easy. I'm not saying it's easy. I'm just saying that the condition that we're looking for can give us a high probability to extract money out of this market like it's a freaking ATM piggy bank. And with that being said, guys, I'm gonna head out. Just wanted to come on really quickly to drop a video, talk about like, the stats for today. I'll start showing plays a little bit better than that, but yeah, peace.